I want to kick off with the market action we've seen over the last 24 hours, triggered seemingly by this profit warning from FedEx. The company seen as a bellwether of the global economic outlook. The stock tumbled yesterday. Now we're seeing an outsized sell-off in the European logistics names. Why has this come as such a surprise to investors?
I think good morning, first of all, Juliana and Joanna. I think the investors were focusing very much on what had happened over the last cycles, meaning we had a disinflationary, the Fed was friendly and moderate, but it's no more like this. It's irrelevant now. Most of the 60-40 asset allocation and even risk parity had a disastrous year because of that. I think we were not geared to face such a change in terms of policies and also recessionary risk. Talking about the recession that the CEO of FedEx is mentioning, it's interesting to look at the nature of the recession. In fact, he has a very strong venture point to appreciate the global trade from his side. And that's what he is reflecting with his comments. And the reality, we are seeing a slow burn recession based on de-globalization and sovereignty of domestic demand. And that's why the US is probably a silver lining into this environment because of the autonomy it has on the energy side, the protection it has with the dollar related to the Fed policy. The strong dollar is really a Fed tool as well in this inflationary environment. So it's not easy time, and it's not time for conventional asset management.